We need regulatory reform because the excesses of the past have caused the crisis. So we need to correct this, and it's fully justified to reinforce the prudential requirements. But at the same time, we must be careful not to go too far and to make long-term financing too difficult. So my view is that regulators, within their mandate, have to ensure both that financing is not in excess and is not a source of instability, but at the same time that too high requirements do not prevent long-term financing.
What is really important is to be able to marry the two objectives of financial resilience. We cannot afford to experience another financial crisis. We don't have the financial means to face it. With the ability of our financial institutions and financial system to finance our economy. That is a very complicated issue of calibration. That is a very complicated issue also of diversification of the financing of our economy. We need to be less dependent on banking financing, while not, I don't mean by that diminishing the financing by the banks, but I mean complementing it by market financing. We do not have a deep and working capital market in continental Europe. It's a huge challenge to create one. We need to revive securitization as a means to finance, in particular, infrastructures, but also long-term industrial assets. So there is a lot of work ahead of us.
What was very interesting is first to understand the diversity of needs and the requirements, which are so different from countries, from type of enterprise, ownership, and so on. So first thing, we have to respect the diversity of things. This is important. Second thing, and I think it is very important for Finance Watch, of course, is that players, they can bring their own proposals, they can bring their own solutions. So the European system has to work the way it has, through proposition by the Commission, going through the Parliament and so on. But it is very important that the civil society should be involved in the process. And it is, of course, one of the jobs of Finance Watch, which I believe is very important.
Actually, as a financial regulator, I must try and make my best efforts to restore confidence in financial markets, to protect the interest of the people that invest their money in those financial instruments, and at the same time to convince them that finance is useful, finance is necessary for growth, and it is not a solution to refuse completely to invest money on a long-term basis, because this is necessary. So we have to find the right balance to restore a very robust financial system and make sure that it is not only robust, but it works in the interest of long-term economy.
The most important thing is nowadays there is not a problem of lack of money, it's a problem of distrust, of lack of confidence. So we have to go together to restore the confidence between us.
Today was the right occasion actually to bring together people with different perspectives on how and try to find positive solutions to our financial needs. I'm working in a clean tech, a fast innovative startup company. We are struggling every day to actually get financing from the traditional systems, the traditional channels, and we were actually, it's a way to find how we could get alternative solution, or either way lead the existing players to provide us with financing.
I think this conference was a very important starting point of a debate which makes clear that in future our welfare will depend on, are we doing investments in real economy, in infrastructure, in public services, etc. If we don't get them right, we will lose quality of life in Europe.
When we're talking about financial constraints, it's important to be aware that we're in a severe recession, and this recession is policy made. It's a direct result of a wrong austerity policy within across Europe, and of course this also has strong effects on the financing side of companies, because if they can't sell anything, it's just reasonable for a bank not to give credit to this company. But however, I think this is important that we do something about the real economy, and also one has to remember that on the one hand there are large amounts of liquid capital that are looking for a safe way to invest. On the other hand, there are huge investment needs, especially in the ecological sector. If you think of renewable energy, if you think of infrastructure, transport infrastructure, if you think of making living housing suitable for the elderly, for example, if you think of getting a renewed industry that is fit for the future, there are huge investment needs, and what one has to do is to get all the liquid monies looking for safe investment, getting them to the real economy. And we propose that to build up a fund. We call it a future fund, which would be able to sell bonds on the market and collect them, and which is controlled by probably the European Parliament in some democratic way, and which would channel those savings to investments that are really needed in the real economy.
I think there's a lot of thinking today about the role of financial institutions in financing the long-term needs of the economy. And my main message is that there's a lot of slogans when people get involved in this debate. And there's a very few information about the actual impact of investment portfolio on the economy. So what we advocate for is to develop measurement methodologies in this area, and especially have the support of the European Commission in developing this type of methodologies, and then introduce mandatory disclosure both for companies, financial institutions, investment products managers, disclosure about what they finance with people's money. So that's my main message.
Long-term investment is about more than just a specific set of products or a portfolio allocation to infrastructure or to projects with a need for long-term finance. For me and for ShareAction, it's about really changing the mentality of institutional investors so that when they make investment decisions, they do it with a mindset of seeking assets that have the potential to create sustainable value in the real economy over decades, not years, rather than seeking to profit from short-term movements in asset prices. So in the language of Finance Watch, it's about investing, not betting. In the language of John Kay in the UK, it's about investing, not trading. I think pension funds do have the potential to be providers of patient capital and also to be a positive influence on corporations for long-term sustainable behaviour. But that potential is unfulfilled at the moment because of structural blocks in the system. So at each stage of the system, intermediaries don't have the right incentives, have dysfunctional incentives, feel obliged to focus on maximising short-term financial returns and ignore wider considerations. And that's the structural problem that I think we need to address.
Well, what we looked at really was the potential of making long-term investors to really focus on what is possible to and what is needed by people. Obviously, I'm working for the social housing sector. Housing is something that everybody needs. All the EU citizens, they do need to have a roof on their head, and it's today one challenge. It's not something that is obvious. Many people are stressed by their housing condition. They are losing their housing in Spain because of the banking, deleveraging. So the financial market are really underperforming for the housing needs. And basically what we discussed is how that can be changed. And for us, there is a clear need for coming back on a real public role in guaranteeing those investments and in directing those investments into something that really people need. And an EU guarantee on housing, affordable housing, because of course what we cannot create is the next housing bubble. but to really manage to focus the investment into something which is affordable for people, that would be basically good for all EU citizens. We don't want to have a next crisis, we don't want to have a next housing bubble, but nothing is done for the moment to direct investment in real needs and affordability of the housing.
The message is to start thinking about a very simple question. Do we have the information we need to foster long-term investment, long-term financing? Information is the basic ingredient for any type of reform. You can say that we need more, politically, you can say we need more investing, long-term perspective, we don't need a short-term, but really what you're really talking about to make it happen, one ingredient is, of course, the information. The current accounting information is not enough, is not apt to help long-term investment. And therefore we need different types of information.